Semiconductors are the lifeblood of modern technology. They are the fundamental building blocks of electronic devices, acting as the switch that controls the flow of electricity in circuits. This property allows semiconductors to perform a wide range of functions, from amplifying signals to converting energy. The importance of semiconductors extends beyond just electronics. They are integral to the operation of a vast array of products and systems that we use every day. From smartphones and computers to cars and home appliances, semiconductors are everywhere. In the realm of smartphones and computers, semiconductors are used in microprocessors, memory chips, and display screens. They enable these devices to perform complex computations, store vast amounts of data, and display high-definition images. In the automotive industry, semiconductors are used in a variety of systems including engine control units, airbag deployment systems, and advanced driver assistance systems. As vehicles become more connected and autonomous, the demand for semiconductors in the automotive industry is expected to grow exponentially. In home appliances, semiconductors are used in everything from refrigerators and washing machines to air conditioners and televisions. They help improve energy efficiency, enhance performance, and enable smart features. Moreover, semiconductors are critical to the advancement of emerging technologies such as artificial intelligence, Internet of Things, and 5G. They are used in data centers that power cloud computing, in sensors that enable IT devices, and in base stations that deliver 5G connectivity. In summary, semiconductors are not just important, they are indispensable. They are the driving force behind the digital revolution and will continue to play a crucial role in shaping the future of technology. As such, investing in semiconductor stocks can be a strategic move for those looking to tap into the growth potential of this vital industry. The semiconductor market is a dynamic and rapidly evolving industry. It is driven by a multitude of factors, including technological advancements, economic conditions, and global supply and demand dynamics. In recent years, the semiconductor industry has experienced significant growth, fueled by the increasing demand for electronic devices such as smartphones, computers, and IT devices. The advent of new technologies such as artificial intelligence, AI, machine learning, and autonomous vehicles has further spurred the demand for semiconductors. However, the industry has also faced challenges. The global chip shortage, exacerbated by the COVID-19 pandemic, has highlighted the vulnerabilities in the semiconductor supply chain. Manufacturers are struggling to keep up with the surging demand, leading to increased prices and delayed product launches. Despite these challenges, the outlook for the semiconductor industry remains positive. According to a report by the Semiconductor Industry Association (SIA), global semiconductor sales are expected to grow by 8.4% in 2024, reaching $522 billion. The industry is also witnessing significant investments in research and development, R&D, and capacity expansion. Tech giants like Intel, TSMC, and Samsung are investing billions of dollars to build new fabs and enhance their manufacturing capabilities. Moreover, the industry is seeing a shift towards more advanced technologies. The demand for chips manufactured using advanced process nodes, like 5 nanometers and 3 nanometers, is growing, driven by their superior performance and energy efficiency. The semiconductor market is poised for continued growth and innovation. However, it is also a complex and volatile industry, influenced by a myriad of factors. Investors looking to invest in semiconductor stocks need to keep a close eye on these market dynamics and trends. If you liked this video and want to see more, subscribe so you don't miss out on new uploads. The first stock on our list is NVIDIA. NVIDIA is a tech behemoth in the semiconductor industry that has been building its legacy for the past 2 decades. Over the last 20 years, its stock has returned an eye-catching 25,514%. In 2023, NVIDIA had a standout year. Known for its innovative graphics processing units, GPUs, that power everything from gaming, automotive, and healthcare to AI, these high-performing chips have driven NVIDIA's performance. In the third quarter ended October 29, 2023, revenue jumped an incredible 206% from the year-ago quarter and 34% sequentially to $18.1 billion. Additionally, adjusted earnings per share, EPS, shot up more than 6-fold from the prior year quarter and 49% sequentially to $4.021. Staggering growth of 279% year-over-year in the data center segment and 81% growth in the gaming segment contributed to the third quarter revenue increase. For the 9 months ended October 29th, NVIDIA reported a gigantic free cash flow balance of $15.7 billion, which should allow it to fund future AI collaborations, clear off debts, and pay dividends. However, ongoing U.S.-China trade concerns raise the question as to whether NVIDIA can uphold its status as a semiconductor juggernaut. In October 2023, the U.S. Commerce Department announced limitations on the export of advanced computer chips to China. Notably, 20% to 25% of data center revenue comes from China and other nations impacted by the new export restrictions. As a result, NVIDIA anticipates a minor decline in revenue for the fourth quarter, somewhat offset by growth in other areas. Factoring in these headwinds, revenue is estimated to be around $20 billion, plus or minus 2%, for Q4, in line with analysts' prediction of $20.03 billion. Additionally, management projects an adjusted gross margin of roughly 75.5% for the quarter. Looking ahead, analysts predict revenue growth of 118% to $58.7 billion, with EPS growth of 268.3% to $12.30 for the full fiscal year 2024. Despite these challenges, NVIDIA's future looks promising. The company is expected to release the GeForce RTX 4090D, a modified gaming chip, in January. This new product launch could potentially boost NVIDIA's performance in the gaming segment. NVIDIA has demonstrated strong performance and has a robust strategy for future growth. However, potential investors should be aware of the risks associated with geopolitical tensions and trade restrictions. As always, it's important to do your own research and consult with a financial advisor before making any investment decisions. The second stock on our list is Advanced Micro Devices, AMD. AMD has been a key player in the semiconductor industry for many years, and it has made a remarkable turnaround under the leadership of CEO Dr. Lisa Su. In 2023, AMD had a standout year. The company has cemented its place in the AI accelerator market with the launch of its MI300 line. This product line has received positive responses from end users, and major partners have announced that they will use AMD's accelerators and offer them as a choice for their clients. AMD's MI300 line of accelerators is getting a good response from the industry, highlighting the need for technology and room for competition within the industry. End users from Oracle to Meta, Microsoft, and OpenAI have stepped up to say they will use AMD's accelerators and incorporate their use into their ecosystems. Not only do the chips offer an alternative to NVIDIA, but they are also better suited to some use cases. However, AMD faces competition from NVIDIA's next-generation chips, such as the H200, which will up the ante in terms of performance. The good news is that AMD is also working on its next-generation technology, which will bring advances of its own. AMD CEO Lisa Su set a high target when she revealed the company's $150 billion addressable market forecast over the summer. That target implies a substantial amount of growth from today's market, valued at less than $75 billion, and was increased at the Investor Day event. The company now expects the AI accelerator market to be $400 billion by 2027, which is nearly 300% growth compared to this year. AMD stock trades at a lofty 40x next year's earnings consensus, but the consensus for next year is overly cautious and does not factor in the new market outlook offered by the company. The analysts expect only a 16% YY revenue growth in 2024 with minimal margin expansion despite healthy demand demonstrated by NVIDIA and the expected 70% CAGR for the AI accelerator market. According to analysts, AMD stock has a predicted upside of 21.64% based on their 12-month stock forecasts. The average 12-month price prediction for Advanced Micro Devices is $146.50 with a high price target of $200 and a low price target of $80. However, according to CoinCodex's AI algorithms, AMD shares are projected to trade at around $125 apiece on January 1, 2024. AMD has demonstrated strong performance and has a robust strategy for future growth. However, potential investors should be aware of the risks associated with geopolitical tensions and trade restrictions. As always, it's important to do your own research and consult with a financial advisor before making any investment decisions. The third stock on our list is Taiwan Semiconductor Manufacturing Company, TSMC. TSMC is the world's largest dedicated independent, pure-play semiconductor foundry. As a foundry, TSMC manufactures chips for other companies that design but do not have their own production facilities. In 2023, TSMC had a standout year. The company has been able to absorb excess capacity, rebalancing supply and demand by the end of 2021. This has led to an optimistic outlook for the foundry, with analysts predicting an approximately 18% potential upside. TSMC's dominance in the market is due to its advanced manufacturing capabilities. The company is at the forefront of process technology and has the largest semiconductor capacity of any foundry in the world. This allows TSMC to serve a wide range of customers, from large multinational corporations to small startups. However, TSMC faces challenges from rising competition and geopolitical concerns. The company's most prominent competitor for advanced chip production is Samsung, which claims about 12% of the market share. Moreover, Intel's Intel Foundry Services (IFS) has emerged as a top 10 third-party producer with machines bought from ASML. This potentially gives Intel the ability to compete at the top end of the chip market. Despite these challenges, TSMC's future looks promising. The company is expected to transition from 5 nanometers to 3 nanometers processor node tech in the second half of 2024. This transition is linked to TSMC's plan to shift 5 nanometers production from Taiwan to the US, with the Arizona plant expected to go online in the first half of 2025. If 5 nanometers demand remains strong, there is actually a chance for TSMC to pull the Arizona mass production schedule back into 2024. In conclusion, TSMC has demonstrated strong performance and has a robust strategy for future growth. However, potential investors should be aware of the risks associated with geopolitical tensions and trade restrictions. As always, it's important to do your own research and consult with a financial advisor before making any investment decisions.